Recording in progress.
Online. Good evening. Can you hear me? Can someone confirm if you can hear me, please?
Good evening. We can hear you,
We can hear
sir.
you, sir.
All right. Good evening. Good evening. And welcome to pre-scene analysis November 2020. May 2025, sorry, for May 2025. The case have been released about, I think 4 days now. So definitely you must have gone through the case, even though maybe you don't understand what it's all about yet. But I'm very sure at the end of this class, you will have better and clearer view of the case. Then on Saturday when we meet, we can now go more deeper than what we expected. But today I'm just going to do the introductions to the case. so that you can get familiar with the case. Then afterward, we meet again on Saturday. Okay, so let's start. Let's start. This is the case. And then I believe some people will have gone through the case. So this is the case. And this is what we call pre-scene analysis. This is what we call pre-scene analysis. So I will just walk you through the important points of it. I can always put those important things there. So we have to re-emphasize it every time. So they said time allowed 4 hours, including reading time. So it means on that day, you have 4 hours only to finish up this particular case study. You are to use case study answer booklets of this paper. So now they start by saying pre-scene. This material is issued prior to the examination dates to enable you familiarize yourself with the case scenario so that you can undertake any research. That is number one. That is the purpose why I can release pre-scene, so that you can what? You can undertake research on the case. And one of the way to do research is where you are today. Okay, and then analysis that you may deem fit. And that is why you are also here. We are going to do the analysis as well. This pre-scene part of the case study examination is also published on the Institute website. You must not bring this material with you to the examination hall. I believe that is clear. It means this case has been with you for about 2 weeks. You are not expected to go to the examination hall with it again. You should have mastered every line of it and make sure you have it in your head. Okay, that is what that case is saying. Upon receipt of this material, you are required to spend the next few days to the examination or the examination date to familiarize yourself with the information provided, carry out any additional research and or analysis about the industry, together with the relevant developments and analysis, and analyze the what? The financial results provided in preparation for the examination. We are going to do all this preparation and analysis as we move on. You should note that the use of pre-scene part of the case study will not significantly help you in answering all the questions during the exam or during the examination. It means if you get to the examination hall, you only focus on pre-scene. You don't even bother about the unseen you are going to see on that day. Then you're on your own, because pre-scene alone is not enough to pass the examination. It must be the combination of pre-scene and the unseen. And that is the reason why he put it that way. It is essential that you carry out sufficient analysis on your own so that you can leverage the pre-scene part of the case scenario as appropriate during the examination. Okay, I'm just trying to walk you through what it's all about. At the start of the examination, you will receive the complete case scenario. That is, you will receive a complete question that will have both pre-scene and the unseen. And the unseen part will be the continuation of what the pre-scene is talking about. And I can bet you no single letter will be missing from what we have now, which is pre-scene, when you get to the examination hall. It will be just copy and paste, then additional to what? To pre-scene, to unseen part of it. Okay, which include the question to be answered. You must use the answer booklet provided by Ican in the examination hall. Any solution presented with other papers will not be marked in capital letter. Assessment of the case study. This place is also important before we go deep into the case given to us. Assessment of the case study. The marks in the case study examination are awarded for professional skills and are appropriately allocated as follows. So it means your aim on that day when you are writing your case study is, number one, assimilating and using information, 20 marks. If you are able to use the information given to you appropriately, you are earning yourself 20 marks straight away. Number two is structuring problems and solution, not just to give us problems, provide solution to it. Okay, structuring problems and solution. When you are able to identify that this is a problem, and you apply the solution to it. Number next, applying judgment. That is, you are able to decide that this is the best way for the organization to pay. This is the best way to go, the judgment. Then number three or number four, drawing conclusion and making recommendations. So you are able to make your conclusion. Conclusion will be on everything you have been writing. Maybe you have identified some problems, you have identified some key elements, then you will provide your recommendation on it. Then the next one is demonstrating integrative and multidisciplinary skills. This one is talking about this case study will be touching different areas from papers you have been writing from foundation. It will be touching MI, to be touching what you have learned in FA, to be touching what you have done in PM, it will be touching what you have done in FR, it will be touching what you have done in SFM, it will be touching what you have done in tax, in CR, in AA or AAA. It will be touching all this area. That is why we call it multidisciplinary skills. And the last one is presenting appropriate appendices. The appendices will be the calculations you have done, and you can see just 10 marks. All the calculations you have done, do the ratios, do the calculations on the data, maybe investment appraiser or whatever they want to give you, everything, appropriate appendix. That is, you label it accordingly, how it's supposed to be. Of the total marks available, 20 marks will be assigned to the executive summary section of your response, and approximately 10% will be assigned for your proper consideration of ethical issues. Number one, executive summary. Executive summary will carry 20 marks, and that is why you must be able to draft a good executive summary so that you can grab your 20 marks at ease. Then number two is that ethical issues. The ethical issue will always be in the what? In the case. So you must be able to identify in every case scenario given to you that these are the ethical issue, these are the ethical issue, these are the ethical issue. Okay? Within your answer to the requirement, although ethical issue is not a specific requirement of this paper, you will not see it as part of requirement 1, which is financial analysis, or requirement 2, which might be investment appraiser, or requirement 3, which might be the business analysis. You will not see it in any, but it is expected of you to also talk about the ethical issues. As it has been tested in other subjects of the Ican professional exams, it will be tested within a requirement, which may include any of the following areas. What are the following areas the ethical issue will be testing? Number one, lack of professional independence or objectivity. That is, when you can see that these particular people will not be independent to carry out their activity in the case, or it will make them to go bias. Okay, that is one ethical issue. Another one is the conflict of interest among the stakeholders. When you see that there is conflict of interest between the directors and the executive director, or we are going to talk about all these things as we move on. Then next one is doubtful accounting or a creative accounting practices. When you start seeing figures that are just created, they are not real, then it becomes a doubtful accounting or creative accounting. And those are the ethical issues they want you to see, especially if that financial statement given to you is not audited. then it's likely to be a doubtful accounting or a creative accounting practice. Then unethical business or commercial practices, when you start seeing them going into another business with another company that is not approved, the industry is not recognized or approved by the CAMA or by law, then you notice that something is wrong with this. Then appropriate, for example, maybe like money laundering. So that is for that one. Then the next one is appropriate pressure to achieve a reported result. When you see the top management is giving pressure, is putting pressure on the what? On the lower staff or subordinates in order to carry or to achieve a particular goal. And you know that what the pressure is not what is not ethical. Then you note all this one. We are still doing the introduction. We have not started the case at all. Okay, you should know that the marks are not awarded for simply restating facts from the case scenario. That is, you can see the case scenario, you just copy and paste into your notes. There is no mark allotted to that. But marks are awarded for demonstrating professional skills and technical depths. That is, you are able to bring in professional skills and then the technical depth. Therefore, to succeed, you are required, number one, show sufficient evidence of knowledge of the case scenario. And that is why we are here. Let them know that you understand the case very well. Be able to carry out appropriate analysis of the issues involved and suggest feasible solution to the problems identified. You will identify problems in the case, but not just to identify. Make sure you give solutions to all the problems you identify. Then demonstrate ability to make informed judgment on the basis of analysis carried out. So if after you have done all your calculations, the one project or whatever calculation you have done, one is okay and the other one is bad, and you are still asking them to go for the bad one, it means you are not actually following what you have analyzed. So when you want to give your judgment, make sure it's based on the analysis you have done, either in calculations or other models you are going to use. And the last one is generate reasoned conclusions upon which relevant recommendations are made. You can't just tell me to go for this project. Why are you asking me to go for this project? You must be able to give me reasons. Convince me that this is the reason why you asked me to wear blue. If you ask me to wear blue, why do you want me to wear blue shirt? So you have to tell me this is the reason. Okay? Omission of any of the above will diminish your chance of what? Of success in the examination. These are the key areas you must first notice before you say you want to sit for case study. Okay, now that you have done that within 10 minutes or 15 minutes, now let's go proper into the case given to us. Now, case study, Devcon Manufacturing Limited, that is the name of the company given to us. So it means, no doubt, we don't need to go to anywhere. They've already called this one manufacturing. So it means this case scenario is a manufacturing case. And you have to have gone to different internet by now and start searching. Now, there's no doubt about it. The financial statement they are going to give you will be a manufacturing financial statement. So they won't give you service-based financial statement. It's going to be a manufacturing financial statement. That is inventories and everything that relates to manufacturing company. Be expecting that. There's no doubt about that. Now, about you, Matthew Idemudia. On that day, your name is Matthew Idemudia. That is simple and straightforward. And here they have given us 5 exhibits already. Exhibit 1 is talking about you and what you are required to do. So you are Matthew Idemudia. Either you are Joy now, you are Felicia, whatever you have. Forget about that. On that examination day, your name is Matthew Idemudia. Now, they also talk about the Nigeria economy. They summarize everything about the Nigeria economy, how good it is, and the challenges you are facing. Then Exhibit 3, the Nigerian diaper and sanitary pad industry. They also talk about the industry in which the company is operating. Then they talk about the DAFCON Manufacturing Limited and the DAFCON response to environmental and sustainability concern. Don't worry, we'll be treating all this one by one. Now, Exhibit 1, they said about you, Matthew Idemudia. You are Matthew Idemudia. There's no doubt about that. An accounting graduate, writing the professional level of Ican examination. You are employed as finance and business analyst. Finance and what? And business analyst by DEFCON Manufacturing Limited. Simple. It means there is no third party here. You work in DEFCON and you report to Tafa Gabari, the company's director of what? Of finance. This one is straightforward and simple. You are writing internal reports because you stay within the organization. So this is an internal report and you have to get ready to go and refresh. How will I write my internal reports? Now, that is number one. Number two, you will report to Tafa Gambari, the company's director of finance. That is who you are going to report to. So internal reports, clear and tick it. Now, number two, your responsibility includes, number one, preparing detailed financial analysis and reports on the performance of the company. So you are preparing financial analysis. So definitely they are going to give you financial statement in the exam. As long as they have put this first line there, be expecting it in the exam. However, they might give you year by year. They might give you product by product. They might give you region by region because it's a manufacturing. So what I want to be sure of is that you will see financial statements in the examination. Now, let's look at it. What is that requirement talking about? What are you expected to do with that requirement? So let's go into that requirement. So I'll be taking that requirement one by one for me to explain it better to you, so that when you get to the examination hall, you will know exactly what they want you to do. Now, company's performance involve a thorough review of key financial statements. So when they say performance review, what are they talking about? They want you to review the income statements. They want you to review the balance sheet, and they want you to review cash flow statements, along with a comprehensive set of financial ratios, performance metrics, and trend analysis. So in the examination or now, if they did not give you cash flow statement, there's no need to analyze any cash flow. It means your focus will be on what? On income statement. Now, what is the purpose? Purpose, a brief overview of the financial health and performance of the company for the reporting period. What we want to know is to know the what? The financial health of organization. Anytime they ask you to analyze the performance of organization, it means they want to know the financial health of the organization and their performance. Are they doing better than company A, or they are doing better than company B? That is what they want to, that's what they want to test. Okay? And it might be quarterly or it might be annually. They might give you 5 months. They might give you 3 months. They might give you 1 year to analyze. Just make sure you stick to the instruction or to the requirement. I will show you where the requirement will be when we go, as we move on, or maybe on Saturday when we meet again. Now, key findings. What are the things they want you to find in the first requirement? Highlight important trends, notable achievements, and areas that require attention. That is your focus. You want to look at what is the trend. The revenue, is it growing or is decreasing? If it's growing, what is the percentage of the growth? The cost, is it growing or is reducing? If it's growing, what is the percentage of the increase or of the reduction? That is the first thing, the trend, how it's moving. Compare it to last year or this year, or compare one product to the another, or comparing region to region. It depends on what they are going to say. The notable achievement, look at it. What have they achieved? Have they done better than the last year, or they are still doing better than the 3 years ago? Or is it the same thing? Or is it going down? Then area that require attention. Which of these line items do you think need urgent attention? That is what they want you to do. Then after you have been able to identify the problems, or you have been able to identify the issues, then recommendation. Summarize actions that could be taken to address challenges and to leverage on opportunity. That is what your recommendation want to be. You have identified the issues. What is your recommendation? What do you think they can do to address the negative aspect you have identified? Then the positive one you have seen, how do you think they can continue to leverage, to continue to use that as opportunity? That is what that part is talking about. Now, when you are analyzing the income statement or income statement analysis, we look at the revenue. You break down the company's revenue growth compared to previous period. And then industry what? Industry trends. Discuss factor driving changes, such as increase in sales, new products, or pricing strategy. When you see the revenue growing than the other, or revenue in 2025 is growing than the 2024, you will identify what could be the reason why that thing is growing. Cost of goods sold. Assess how changes in cost of goods sold affect the gross margin. That is your focus. So the cost of goods sold increased, the revenue increases, but does it affect the gross profit margin? If it affects the gross profit margin, is it negative or positive? That is your focus in that area. Then operating expenses. Analyze administrative expenses. That is research and development and other operating expenses. Comparing them to historical performance. That is, you look at it from the previous year. How is it doing? Then we have earning before interest and tax, or we call it EBITDA. Provide insight into the operating profit and operational efficiency, excluding non-operating income. Here you are only looking at the real income from the organization, not they are selling disposal of assets, disposal of a car. That's revenue or income is not part of the core business of organization. So make sure you know how to analyze the EBITDA. All this one will be done on Saturday by God's grace. Then net income, evaluate overall profitability, highlighting non-operating items such as interest expenses, tax provision, and other. Now, requirement 2. What is requirement 2 talking about? Not really requirement yet, but that is what they are going to use to form your requirement. This is not the requirement yet, but they have already given you hints on what they want you to do in the exam. So all these things will be combined into 2 requirements in your examination. So make sure you take note of that. So number 2 now, it says analyzing company's financial statements to identify areas of weakness and profiling likely solution to correct the abnormals. So now, what is that aspect talking about? That is number 2. Analyzing I want to use more time to analyze what this requirement is actually, your responsibility, what is actually talking about, so that you will have idea of what to do when you get to the examination hall. Now, analyzing company's financial statement to identify area of weakness and providing likely solution to correct the abnormalities. Now, the first thing is that when you are looking at the strengths and weakness of organization, we are actually talking about the balance sheet items or the statement of financial position analysis. So we are looking at the assets, we are looking at the liabilities, and we are looking at the equity part. So under assets, they assess the structure of the current versus non-current asset. That is your focus in that area. You want to look at it, okay, company has 1 million or 1 billion assets for non-current assets, and they have 50 million or 50 billion or 2 billion for current. That company is not doing fine. They focus more on current than what? On capital expenditure. But you can only look at it, compare it to what? Current liability and non-current liability. So when you are analyzing the asset, which is the strength or weakness you want to check, evaluate any significant change, such as what? New investment or asset impairment. You will look at it in the last 5 years, because they're going to give you like 3 years financial statement. You look at it in the last 3 years. What is the significant investment that this organization have made on what? On the non-current asset. Especially this is a manufacturing company, so be expecting a big figure under non-current asset, because they are going to buy big plants, they are going to buy big asset to run manufacturing company. So be expecting that and make sure you focus on that when you get there. Then the second one is liability. Analyze the company's short-term and long-term debt, paying attention to debt ratios and maturity schedules. Look at it. How much is the debt they are getting? Is it getting more than, is it increasing or is coming down? You know, when the equity to debt, when it's up to 50%, we said, okay, this is normal. But when it's getting more than 50% with that, then we can say this company is highly geared. Those are the areas they want you to identify. Or this one is lowly geared. This one is highly geared when it is more than 50% or is lower than 50%. You will also, not only that, you also compare your long-term liability to non-current asset. The company have 5 billion naira from bank. Are they using the 5 billion naira on current asset, or they are using it on non-current assets? Those are the areas you are going to look at it. So in a nutshell, the non-current liability should finance the non-current assets. That is, you borrow like 1 billion naira from bank, use that 1 billion naira to finance projects that will last for more than 1 year. Why? Borrowings or short-term loans from bank or anywhere you borrow it should finance the current asset, so that you can quickly turn that money into cash and start paying back the what? Paying back the money. So those are the areas you must make sure you identify when you see the financial. Now, we cannot see any financial statement here. The lecturers, the pre-seen, everybody, we are unable to see the financial statement. But that is why I took my time to analyze how are you going to see, what are the indicators you are going to see in the exam to know that this is the problem I'm looking for when I get to the examination. Okay, now they said highlight risk related to high leverage. Please mute your mic. Highlight risk related to high leverage. That is, if the loan keep increasing, what are the risks that are involved? Or short-term debt. Then the equity part now. What do you want to identify? What do you want to analyze under equity? Review changes in shareholders. For equity to increase, it means there is additional shareholders, or the shareholders, the current shareholder increases their shares. So is it that there is increase in the shareholders or they increase their share? Including retained earnings. The retained earning, is it reading debits or is it reading credits? The retained earning should be reading credits. That is, the retained earning should be credited. But when it's reading debit, it means they are running at a loss. And when they are running at a loss for a certain period of time, then we can say the going concern is what? Is threatening. Those are the areas you have to look at and touch every bit of it in the examination hall. Then share repurchases or dividend. Are they paying dividend to the shareholders? or they are not paying dividend? Are they paying dividend from the retained earnings, or they are paying it from the profit? Those are the area you must make sure you take note of it. Okay? Then under cash flow, what are the things they want you to do in cash flow? They may not give you cash flow in the examination. I'm not sure. It has been long. I'm not even sure I've seen cash flow before. But if peradventure they might change these diets. So in case you see cash flow, what are the things you want to analyze under cash flow? So number one, you want to look at the operating cash flow. You know, we have operating activities, we have investing activities, we have financing activities. So under operating activities, what are you looking for? What do you want to analyze? Then analyze cash generated from core business operation. Assess whether the company is generating sufficient cash from operation to fund its activities. Normally, the company should be able to generate enough cash to fund or to run the organization. But when the operating cash flow is reading negative, then there's a problem in that organization. It means the shareholders will be the one carrying the running the operation of the organization. They will be going to bank to borrow, and you are going to see that under financing activities. They are going to be bringing shares so that there can be money in the organization. Those are the areas you want to look at when it comes to operating activities. Then when you come to investing activities or investing cash flow, you are reviewing cash spent on investment. That is acquisition of associate or of a subsidiary, investment in capital assets or expenditure, anything, investments. Then number two is that, and whether these investments are aligned with growth strategies. Every organization has their own strategies. They have their mission, they have their goals. Then you have to look at this investment they are making. Is it in line with their vision and mission? If it's going against their vision and mission, then there's a problem. You must be able to identify it. Those are the area you want to look at. Okay? And number next, which is the financing activity aspect, discuss any changes in debts or equity financing. Is their debt, is it increasing? If the debt is increasing, there's a problem. There will be high interest. There will be repayment also will be affecting them. And their going concern might be what? Might be threatened, including new borrowings, debt repayment, or dividend paid. I believe that aspect is clear. I will entertain question later after this. Then number next is assessing, which is the next one, assessing operational and strategic business proposal to see how each align with the company's strategic objective and impacts on business and financial risk. Okay, now what is that area talking about? That is where we are going to be looking at the financial aspect of it, the perspective. They can give you different, you can use business analysis to analyze. And SWOT is one of the best models to use for this case. I'm going to put all these things in my case study, in my report that I will be releasing on Saturday. So you will look at it and read it ahead. Make sure you prepare. So SWOT analysis is also suitable for this case. Looking at the strong cash flow from operation, look at the robust profit margin, look at it if there's a low debt level. When the debt is not as high as other companies or whatever they may give you, then they have strength in that area. Then the other side that can be weakness, which is the internal analysis. We're looking at the high dependence on what? On few customers. They don't have customers. So the only few they have, they cherish them, and the customer can decide, they can dictate to them, and they have no option than to obey. That is a weakness. Then limited geographical diversification. How many places, how many regions have they been able to touch? Aging assets need replacement. This is very suitable for the manufacturing company, because we are going to look at their asset. They use asset to generate revenue in manufacturing company. So you have to look at it. When did they purchase this asset in case they are moving toward that area? This asset, is there any new replacement over the year? You look at it. If they give you 3 years, you look at, is there any increase? Is the asset base, is it increasing over the year or is not increasing? If the asset is not increasing, it means they are using the same asset over the years, and that asset will be what? Will be dropping in value. And when the asset is dropping in value, the output also will be affected. Those are the areas they want you to look at when you get to the examination hall. You have to see beyond the examiners, beyond what they ask you to do. Then opportunity and threat. Opportunity and threat is talking about external environment. That is expansion into new markets. That is opportunity. Increasing raw material is a threat. When the raw material is increasing every day, is a threat to the organization. But when there's an expansion in the market, that's opportunity for them. Then new product development. When they develop new products, opportunity for them. But economic downturn affecting demand. When there is recession, when economy is challenged, like the first statement, like the first part they gave us about the economy of Nigeria, or the industry in which the organization is operating, you will see that the economy is affecting demand. But let's go deep into it before we start talking about that. Then the strategic partnership. Did they have partners? Are they the only one doing this, or they have different partners that are also coming together to promote the products? Then the threat can be increased competition in the core market. When you see having so much competitors in the market, then it will be affecting the organization. Okay? Then when you are done with all this analysis, you can now conclude. Make sure you put conclusion and recommendation. You have been able to identify all the problems. That is number one. Make sure you provide the solution to them. The key findings you have been able to identify: summary of the company's financial health, highlight strong areas, especially when you talk about profitability, when the examiner did not specify what type of ratios they want you to do. So make sure you mention ROCE. ROCE is very important and popular. Many investors want to hear about the return on investment and the areas needing attention. Make sure you mention area that they need to put attention. The recommendation, always focus on these 4. Number 1 is cost optimization. Focus on reducing the operational or operating expenses. And then they should improve in income margin. Then debt management. When you look at the debt, is the debt increasing or the debt is reducing? They should be able to manage their debts. Consider refinancing high interest debt or extending what? Maturity to reduce the financing cost. Then diversification. I'm going to entertain question after the class. Don't worry. Then diversification. Exploit diversification strategies to reduce dependency on, and this company is very interesting. They are diversified. They are selling different products. They are not focusing only on one product. They diversify so that if one is not selling, another one will sell. But they are not diversifying into another product entirely. They are still within that product. Everything they are selling is diaper. But they are now selling to different individual categories. Why are they not going out of diapers and introduce another products and be looking, watch out for that kind of requirement in the examination on this case? Then investment strategy. Increase capital investment in areas with strong return on investment potential, where they are going to get more return on investment. Okay, let's leave that. You can also talk about the ratio because I want to be done on time. So when you are talking about the profitability, when you talk about the ratio, because sure, you are going to calculate ratios. You are going to be seeing decline. Look at the decline, negative. Are they giving you negative? Is it giving you poor gross margin? What are the causes, or what will cause this particular problem? High cost of goods sold, inefficient operation. This will be discussed in details on Saturday. Poor pricing strategies. What should be the solution? Evaluate supplier contract and inventory management. Streamline operations to reduce overhead. Adjust pricing strategies and focus on high margin products. Those are the area you can make more profit. Then when you talk about liquidity, that is ability of organization to meet their what? Their short-term obligations. And indicators, what are the things you are going to see for you to know that this company is having liquidity problem? Number one, you can see that current ratio when it's lower than what? When it's less than 1. The normal ratio it should be 2:1. But when the ratio is now 1:1, there's a problem. Or when it is less than 1, there's a problem. So normally the current asset should be greater than the current liability. And by then, you are doing fine. Then poor quick ratio. They are unable to turn their inventory to cash on time. Then frequent overdraft or reliant on short-term borrowing. Every time they will go to bank to borrow short-term. Every time they will go to bank to borrow, there's a problem because they are unable to generate enough cash flow from operating to finance the operating. So they will now run to bank using the financing to finance the operating. That is the problem. So make sure you know how to analyze all these things on Saturday. Then solution, they have to tighten their credit times. Maybe they are selling on credit and the money is not coming in. They have to be what do you call it? To be more stiff to their policy. Then improve cash flow forecasting, refinancing short-term debt with long-term funding so that they can buy more capital, they can buy more capital expenditure, capital assets that will be able to generate more revenue, and then they will have more peace in the overall area. Then solvency risk. This one is talking about high debt to equity ratio. When the debt is too high compared to equity, then it is highly geared and there's a problem. Then low interest coverage ratio. When they are paying more interest than the profits after tax or after interest and tax, that is PBT compared to the interest, there's a problem in that area as well. Increase long-term liability. When the long liability keep increasing, the debt keep increasing, then there's a problem in that regard as well. Possible cause or causes, excessive borrowing. When they are borrowed, they just focus on borrowing every time. Then inadequate equity finance, falling earnings, and the likes. I think we can leave that. Efficiency concern. We're looking at low asset turnover ratios, high inventory days, and high receivable turnover. So what could be the cause? When you see that they underutilize their asset. The asset is not well used to generate enough cash flow. They have more inventory in the store. They are not turning the inventory to products so that they can sell and the cash will come in. That is the problem of efficiency. Then the cash flow abnormality, when you see negative operating cash flow, despite the profit. When their cash flow keep giving negative, it means there's a problem in operation. Inconsistent or decline free cash flow. Okay, then profit manipulation, when they start manipulating the profit. That profit will not affect the cash flow because cash flow will only tell you amount you have in your bank account. It's not interested in all your whatever. You will see the cash flow will be giving negative. And that's why when you want to read financial statement, cash flow is the best statement that will give you the true picture of the organization. Okay, then poor working capital control. We have audits for aggressive accounting and improve working capital practices. Okay, let's stop that on that. Let's go to the next one. I want to explain your responsibility in details so that when you get to the examination, there won't be a problem before we now start going into other parts of the case. Okay, so assessing the company's financial and business forecast together with the assumption upon which they are based to form judgments, conclusions, and recommendations in form of report to the board. It means no doubt there's going to be a kind of forecast in this case because they have already put it there, business forecast, together with the assumption. So they are going to give you some assumption. They can say revenue will grow by 5%, the cost of whatever will grow by 2%. That is assumption. Then you will now use that. Let's go to the explanation I've prepared for you. So we can see strategic alignment evaluation. You have to ask yourself this following question. Does the proposal support the company's vision, mission, and long-term goals? That is the first thing. The rule is that the vision, whatever business or the proposal the organization wants to go to or want to go for, must not go against their mission and vision or the goal of organization. When you see shows that, that is an indicator. You have to highlight that. You have to tell the management about it. Then which strategy objective does it directly serve? That is market expansion, innovation, cost leadership. You must be able to identify that area. Is it consistent with current capability and resources? How are they going to be able to carry out this particular proposal? Do they have enough resources and ability to carry it out? That are the questions you want to ask yourself. So what are the things you want to use to analyze it? One way you can use business balance scorecard. That is, you are mapping the proposal outcome to the strategic perspective. Then number one, you can use SWOT analysis. You check if it's left friends, please mute your mic, or opportunity, chance, and mitigate weakness or threats. Then they can also look at the operational impact assessments. Then resources requirements. You want to go into this operation. Do I have enough operation, the resources that is required? Process changes. Will it take or will it require new workflows or disrupt the existing ones? Will I need to move my staff from one place to another? If I move them from one place to another, how is it going to affect the organization as a whole? Efficiency gains or losses. Will it enhance productivity or cause bottleneck? Will it cause problem in the organization? Before you can say yes, it will not affect the operation. That is the area you want to do when they ask you to assess the operation. You look at the operation. Then assessment tools. What are the things you can use to assess the operation? Cost benefit analysis. That is, the amount I want to put into this project is 1 billion naira. What will be the benefit from that particular project? Maybe the benefit will be 500,000 or 500 million. Does it worth it? I'm going to spend 1 billion. I will get 500,000. Does it worth it? Cost benefit. Then process mapping. You must look at the process of operation. Then capacity utilization model. Then not only that, you look at the risk. Anytime they want to go into another project, you must look at the risk, assess the risk. The higher the risk, the higher the return. No problem. We all understand that. But the risk they are going through, is there any risk appetite? That is there any limits to the risk they are willing to take? They can tell you that the risk that the company is willing to take is 50%. But when you calculate or when you look at the case, you see that the risk they are going to is about 60%. You must look at the risk that is involved in the proposal they are going to give you. Capital expenditure, we look at the project, look at the return on investment. They can ask you to do NPV, investment appraisal. It can be return on investment. It can be internal rate of return. It might be sensitivity analysis under different scenario. But don't worry, on Saturday, we are going to pick a particular calculations that we are going to be expecting in the examination hall. Then risk to identify. You look at the overrun in budget or time. Are they overrunning the budget? Is their budget reading deficit? Because in the requirement, you will see, they are talking about budget and forecast. Look at their budget. Is the budget is reading deficit or is giving positive? If they are going beyond above the budget they have already prepared, there's a problem. These are the things you must be able to see in the case when they give it to you? Are they depending on input prices? What about the exchange rate? If the project or proposal they want to go to is a foreign contract, you look at the exchange rate. Will the exchange rate continue to grow? Are they going to hedge it? Or if whatever they go to, with the rate, is it going to be increasing or is going to be stable for the whole year of the project? You must make sure you identify all these problems. Then business risk evaluation. What are the risks in the business? Because in this your responsibility, they put risk there. What do you want to know about the risk? What do you want to talk about when you come to risk? You look at the market risk. The risk in which the organization is operating, what are the risks that is there? Is there sufficient demand or market readiness? That is, they want to go into one product. Do they have a customer already waiting for it? Or they will start looking for customers, scanning for the customer before they will be able to sell? Or the customer is already ready, they are just waiting for the product to be available? Then operational risk. You must also look at the operational risk. Are processes mature enough to support the change? Did they have strong process to support the new proposal? The compliance risk. Does it meet regulatory or legal requirements? Is there any requirement from the regulatory body? Maybe CBN, maybe tax reform, maybe tax finance act, maybe all these requirements, maybe company income act, maybe CAMA. Is there any requirements risk, compliance that that it will cost them more money or that they won't be able to meet? Okay, then reputational risk. This particular proposal they want to go to, is it going to damage their reputation, or is going to make them more popular? Is it going to promote them, or it will damage their reputation? You must make sure you look at this area as well. Then after that, you make your decision and recommendation. So after all that, you summarize in business case format, strategy fits, expected benefits, risks and mitigation. When you say risk and mitigation, there are some risks that you cannot completely eliminate, but you can only mitigate it. That is, you can only reduce the risk. As long as they want to go for this particular project, there are some risk that is attached to it already. But because of that, the project is okay, but because of the risk that is attached to it, they will not run from the proposal. However, you must make sure you advise and identify how they can mitigate, how they can reduce the risk to the minimum bearers level. And then the financial projection, and then the KPIs. Go, no go recommendation. Maybe they should go for this or they should not go for that. So assessing the company's financial and business focus together with the assumptions upon which they are based to form judgment. Now, when we talk about, they will give you the focus period. They can give you 3 years to focus for it. They can give you 5 years to focus for it. Okay? It depends on whatever they want to give you. And you must know the difference between the budgets and forecast. Then, what are the key areas you are going to look for? They are going to give you the assumptions. You must look out for that assumption. If they want you to forecast, they will tell you the revenue projection. They want to have this revenue for these certain years. That is, year 1 to be this, year 2 it will be this. They may not give you directly, but they might give you different rates you will use to calculate it. Then cost assumptions. They will give you capital expenditure, profitability, cash flow forecast, balance sheet impact, financing. It depends on what the examiner wants to test. I'm not saying they're going to give you all this, but I'm only exposing you to the areas you should be expecting the question, or where they can actually come out from. So when you are evaluating an assumptions, you look at the area, you look at the assumption, You look at the basis of the assumption, then you assess it. They will say, revenue will grow by 20%. And you look at the previous year, the revenue have been growing by just 10%. How are they sure that the revenue will grow by 20% in the next 3 years? What have they put in place to actually achieve those things? Then the assessment, you will now assess it. So in conclusion, several case assumptions are overly optimistic and lack sensitivity testing. So whatever rate or whatever assumption they give you, you must reason with it. You look at it, you must audit it. Let me use that word, audit it, if they are realistic or not realistic. So if they are realistic, you put it down. If they are not realistic, you also mention it in the case. Okay, we are going to discuss that. By the time I prepare the report, you will see how it's going to look like. We are going to assume some information. Then we will now prepare the report on it. And I will show you. Then the sensitivity analysis, they can also ask you to do that, but I'm not sure they can actually test that. So your findings and the area. So let's look at the risk assessment, because they may ask you to do the risk assessment. So the risk area, what are the risk area? Which of the departments is having high risk? Is it the operation? Is it the business? Is it a particular product that is having high risk? You identify the area of the risk. Then description. What type of risk are you talking about? Is it financial risk? Is it credit risk? Is it reputational risk? You must identify all this risk. Yeah. After you have identified this type of description, you look at the impact. If this thing actually happen, what will be the impact on the organization? Is it going to be high impact or low impact? Is it going to break down the organization, or it just have a little effect on the organization? Okay, then the likelihood. What is the possibility? What is the probability of that particular risk coming to play? Is it going to happen? Is it likely to happen, or is not going to happen? Then mitigation. Reduce the risk. Reduce the risk to the minimum level. Recommendation. Once you identify all these risks, what are the possible recommendations you can give in the report? Revise the key assumption. Align revenue growth and gross margin assumption closer to industry trend or historical performance. That's what I said. If they give you 20%, they said that revenue will grow by 20%. Go and look at it. In the previous year, how many percentage has it been increasing? Maybe the revenue have been increasing just by 5%, and they want to perform magic this year. They said it will increase by 20%. How possible is that one? Or they give you industrial average, industry trends. That is, we have company A, we have company C, we have company D, we have company E. All these companies we mentioned that they are both in the industry, their revenue have been growing by only 2%, and they are proposing 20% increment. Are they going to perform magic in the industry? These are the area you want to look at it when you are assessing the risk. Then incorporate sensitivity analysis. Present multiple scenario in board presentation. Look at it as it is, it is. Then enhance forecasting model. Add dynamic drivers, real-time data field. You look at the data they are going to give you and you use that to analyze. Then review funding strategy. How are they going to fund this particular proposal? Are they going for debt or equity? What are the risks attached to the funding? And we are done with that. Now, the next one, I'm taking my time to actually analyze your responsibility. The remaining one, we can finish it within 15 minutes, because this is where the workload is. You need to understand what they will ask you, what is likely question they will ask you in the examination hall. So next is assessing the company's internal and external business environment. That one they already told you, business environment. And competitors, opportunity, and trend prevalent in prevalent in what? In the environment. What are they asking you to do? They can ask you to use different models to analyze this. They can evaluate both internal and external. This is the best structure as what? As SWOT analysis. They can call it SWOT analysis. They can call it PESTEL analysis. PESTEL also can analyze both the internal and what? And external environments. Then Potter's five diamond, Potter's five forces can also use to assess the external forces. They can also use benchmarking model to understand the competitors or competitive positioning. So these are the models that are applicable to this. So when you are looking at the strengths, I believe we all know the internal environment already, the weakness, the benchmarking. I will share this material on our group chats once I'm done with it, so you can start looking at it ahead. So when you are comparing one company to company B, you can see we have like one company. This is our company here. Then we have competitor A, we have competitor B. And you look at the margin, you can see 28%, 34%, and 30%. You are comparing, this is what we call industry average. You are comparing your company to other companies that operate within that industry. You can compare the research and development, you can compare cost, you can compare their market share, which we are going to be looking at very soon. Then the environment, external environment, all this, you can read them up yourself. Now, what is the next thing they ask us to do? The next one that is also important is the next one. They said, advising the board and management on sustainability issues and assisting in the preparation of the company's annual sustainability reports to the stakeholder. This one, they will test it. Why? Because it's a manufacturing company. A manufacturing company, they will surely pollute our environment. What is the sustainability report talking about? Now, it's talking about how the company, how they are taking care of their environment, environmental responsibility, carbon footprint, all this emission they are releasing into the environment. Because they are producing, definitely they will be polluting the environment. You have to look for all these words, you have to look for it in the case. If they are polluting the environment, and if they are polluting the environment, what are they doing in that regard? Waste management. They are manufacturing companies, so they will be generating a lot of waste. And if they are generating a lot of waste, how are they disposing it? And are they recycling all this waste? Climate risk disclosure, because the smoke will be going to the atmosphere. It will be damaging the ozone layer. All these things, you have to take note of them. And when it goes to the atmosphere, it will bring back what? Heat to the world. It will increase the heat. Temperature will be getting high. How do you notice that? Do you notice that in the case scenario given to you? Then the supply chain of the sustainability. Then after that, that is for environment. How are they taking care of the environment? Then the second one is this social responsibility. It's still under the sustainability also, the report. Social responsibility. How are they giving back to the what? To the environment in which they are operating? Employees, how are they taking care of their staff? Because it's a manufacturing company, so many staff will be exposed to hazardous what? Gas or whatever. Because they are using all this machine to produce diaper and everything they are talking about. How are they taking care of their staff? Ethical issue will be part of this. Sustainability will also affect that. Did they take the safety of the staff very important? And diversity. Community impact and engagement. It will impact the community. How are they giving back to the community? For example, maybe they oil spoilage and the environment cannot even drink good water in the environment. Did they bother to even give them borehole so that they can, or supply water for them because they cannot get good borehole in that environment. Social responsibility, human rights and labor practices. Now, this is a manufacturing company. They may likely be using child labor to do all this their production because they want to reduce cost. You look at it, look at all this area, look out for all these things in the case. Okay, then customer satisfaction and data privacy. Are they keeping the data of their customer and the customer, are they satisfied or not? Then governance. We are still talking about the sustainability aspect of it. The board diversity and independence. How are they? Ethical conduct and compliance. Are they compliant to the sustainability report, the demand, the ethical code, the risk management and processes, transparency and anti-corruption policies? Those are the areas we are looking at. So what could be the recommendation under sustainability? We have one, it can be set clear goals that align with UN Sustainable Development Goals and science-based targets. Make sure what they are doing is in line with that code of conduct. Then IFRS sustainability disclosure, that is IFRS 1 and 2. Are they compliant with that? Then sustainability to risk management, innovation and brand strategic, ensure transparency and assurance, encourage third-party audits and stakeholder consultations, appoint and the likes. Let's leave all this one. Let's go to where we are focusing. You can leave all this one. So when you are writing your report, what is your focus? Commitment to sustainability. What is the company doing? Are they committed to, are they protecting the environment? Are they using renewable energy instead of polluting the environment? Are they bringing innovation that will reduce the carbon dioxide they are releasing in the environment, or the emission they are releasing in the environment? What are the high achievements and priority? What is their priority? Is it just to make profit, or they actually take this serious? Then mission, values, and sustainability vision. Overview of operation and value chain. You look at it, the emissions, employees turnover. When you say employees turnover, are they the staff, are they going and coming? Are they recruiting every time? If they are recruiting every time, it means the staff are not satisfied. So they just leave anytime they leave, anytime they go. They are not taking care of them properly. Then renewable energy use. Okay, that is recycling aspect of it. All this will be given to you when we add it to the class. Now, the last one, which is the last requirement before we move into the case proper, is the drafting reports. This type of report is internal. That's just what I want to talk about. It's internal report that is you'll be writing to your finance director. So I'm going to draft that after the case or before Saturday. So you have to structure it, your findings, the critical issues, and the recommendation. Now, let's go to the case itself. Welcome to the case. I think I've used almost 1 hour. So the remaining 20 minutes, I'll finish it soon. So this is economy in which these companies operate. And then they talk about the Nigerian and everything about it. Where the industry the company operates. We don't need to talk about this much. We can read it ourselves. They talk about the percentage, the challenges that the company is facing, or Nigeria is facing, the CBN. You can see unemployment, inflation, exchange rates, infrastructure problem, that is opportunities in the economy. There's also opportunity in the economy. We have agriculture, we have industrial development, renewable energy. We start seeing so many so many ways to generate electricity. So we are not focusing on generator again. Many people are now using solar, all those things, mining and solid minerals. Okay. Then they also talk about the business environment in which they operate. If you look at it, they said these policies include import tariff, tax incentive, and regulations that impact production and distribution. In addition, government regulation regarding environmental pollution. These are the area I'm also talking about. Okay, and we are going to be writing that in the case. However, the business environment has been challenged by a number of factors, such as erosion in consumer purchasing power, which results in low demand for manufacturing products and the like. You can read all this one yourself, but these are the area we are expecting you to talk about. Deficit in infrastructure. Most of the roads are so bad that vehicles transporting goods from one location to another may spend days before arriving. So these are the challenges they are facing in manufacturing companies. And then as a result of this, of the preceding factor, manufacturing are finding it difficult to finance acquisition, modern technology to improve their manufacturing processes like their counterparts in other climes. Therefore, innovation and sustainable production practices, which can lead to more efficient production process, new products, and high-quality products continue to elude the sector because of the infrastructure. Okay, so now they also talk about the industry in which DEFCON operate. They talk about the diapers and sanitary pad industry. You can see that they only focus on diaper, and they are almost the same thing. So probably they might be diversifying in the unseen. Let's see. I'll still have other things to analyze, but I just want you to go through the case. We don't need to be reading all this. You can read it yourself. I believe some people will have even gone through it like 3 times over and over. They also talk about the population. They have population. And I want you to look at this. They said, with an estimated population about 220 million, people are in estimated national population growth rate of 5.7 per annum. Nigeria has a large, growing, and sustainable market for sanitary pads. So here, this company has opportunity because they have the market waiting for them already. Both babies and adults, our ladies and the babies, both are using all these their products. Production of sanitary pads and diapers in Nigeria is estimated to be less than 20%. So they have only covered 20% out of 100% in Nigeria. So the market share is still there for them to cover of the demand, and the rest are being imported into the country. So it means they are only producing 20% in Nigeria, while the remaining 80% are being imported. And they need to increase the production locally so that the foreign currency, the foreign import can be what? Can be reduced. And then it will improve our economy as a whole. Okay, over 4 billion worth of diaper were being imported annually into the country, which is the detrimental to the economy, is destroying the economy. The intention of the government is to stop importation and see how available local resources will be used, especially as the country has some companies that are into what? Petrochemical, that can provide the needed raw material for the sector. Yes, but now the petrochemical, which is the petroleum and crude oil, has increased. The fuel prices is going, the crude oil price is going up. It will affect the material they're going to purchase. That is one of the factors that you also be looking at. So I think we can just jump all this. We can read this one. Now, the shortfall in supply is reversible since sanitary pad and diapers production is most viable industry that can be established in Nigeria. And the government plan to make the production of sanitary pads and diapers a national developmental issue. There is opportunity for investment, that's opportunity in the industry. This is because all the raw and packaging material input can be sourced locally. They can actually get all the materials locally. Although the technology for the production of sanitary pad and diapers is imported, you can also be looking at this one in the case. They have the materials, raw materials, but the technology, that is the plants, the machine they are going to use to produce it, they have to go and buy it, and they may give you investment appraisal. Be looking for that. But that is not what we are going to do on Saturday. Then the production is not sophisticated. The technology can easily be transferred to experienced workforce in what? In Nigeria. We have opportunity and challenges in the industry. What are the challenges? High demand. What are the opportunities? High demand. There's market for it. Local production potential. They can produce it locally by themselves. Then technological advancement. They can improve in manufacturing technologies. And then government support. Government is supporting them. The Nigerian government has shown interest in supporting local production to reduce import dependency and boost the economy. You can use Pestel for this thing to analyze them. You can see the political aspects of that. Then the threat. What are the threats? Economic challenges. Competition from what? From importers. Those who are importing are competing with the local made. And I know my people, we all want to use imported material, imported goods. Then raw material sourcing. They can actually source this material locally. But the problem is that many raw material can be sourced locally. There are still challenges in ensuring consistent quality and supply. Are you sure they will be able to supply all this quantity they need or the quality they need? That is another thing. Then health and hygiene concern. The staff that will be doing all this, are they going to take care of them? I doubt it. Except if that company is if they have the social responsibility, if their social responsibility is very high. Most of them, they will just use their staff anyhow. No health, no HMO, nothing, no, they not care about their health. Now, that is where we want to analyze. Then another thing is DEFCON Manufacturing Limited. Now, this is where you have to focus. We now want to analyze the company as a whole. And this is another interesting part we are going to now. So DEFCON Manufacturing Limited was incorporated in February 2005. It's not a baby in this industry. So they have been in existence for a very long time. As a manufacturer of diapers and sanitary pad, and it started operation in March 2005. The company has various product lines, luxurious, diapers, sanitary. They have different type of product. It means they are able to strategize. They are not focusing on only one customer. They spread their products to different levels, to rich, to poor, to better, good, still struggling. Everybody can achieve it. Okay, I'm going to explain that. DEFCON has also factories in 3 locations. They did not limit themselves to one location. They diversify into Ikeja, Lagos, which is the heart of industry. They also have in Port Harcourt and they have in Kaduna. It has adopted in each state capital the country from where its distributor has served. That is, apart from producing in Lagos, producing in Port Harcourt, producing in Kaduna, they did not stop there. They have depot. They have where they can put all these things and everybody can buy all over Nigeria. Okay? Then producing and marketing. The company imports about 70% of its raw material. That is a threat. That is a problem. Why are they going to import the material? It will affect their income. It will affect the price. Why? The balance is sourced locally. They are buying only 30% locally. Why the 70% is imported? You have to look for that problem in the question. Now, they talk about the material. They now move on to talk about the labor. They said labor is sourced locally where the factory are situated. So it means labor is available. They have staff. Labor is not the problem, but material is the problem. Where the factory are situated. However, the company has a technical director at the head office in Ikeja. Head office is at Ikeja, Lagos, where he oversees the production and technical issues. The marketing director oversees the sales and marketing activities of the company and blah, blah, blah. Let's leave that one alone. Now, competitors analysis. After this, I will go back to that material. I have some things I want to explain there. After the competition in the industry. Now, competition is very high in the industry with 4 major companies that control 60%. We have 4 companies that are controlling 60%. Why others, they take the remaining 40%. Only 4 companies took that 60%. So it means of the market share, the company are Defcon Manufacturing Limited with 25% market share. Jameson is taking 15%. Denton is taking 12%, and Limson is taking 8%. So it means Defcon, in which we are working on, the case given to us, the company given to us, which is Defcon, is a leader in the industry because it's taking 25%. Is a leader. They said, apart from these 4 companies, we have 20 other companies that control the balance of 40%. So that remaining 20, they are just followers. They are just followers. They are just followers. Now, let's go back to that scenario. Let's analyze. Let's analyze the competitors. I can leave that Defcon because of time. I've explained all this already, so let me just jump this to competitors analysis. Now, Defcon is taking 25% market position. It means clear leader, likely benefit from economy of scale and competitive advantage, brand recognition. They must have recognized their brand in the whole nation. National distribution, product range, threat level high, has pricing power and can influence industry trends. They are the one controlling the industry when it comes to what? When it comes to the diaper. Then followed by Jameson. Jameson is a challenger. You must know that. Strong challenger with potential to grow because 25 to 15 is not that far. They can challenge, they are challenging them. Then strategic, likely aggressive in pricing and promotional activities. You will see that they will be doing their promo. They'll be doing promo all over the world so that they can buy more from them. Threats, gaining ground, especially in urban markets. Then Denton is the next one. So Denton is the mid-size with a lower niche segment. So they need more recognition and the like. So they are part of the what? They are part of the challenger. Then Lipsin is also 8%. They are the one controlling the market. So they have smallest among the top tier. While the under 20 companies, they are just follow. They have nothing to do but just to follow them. Okay, now let's go to the board structure. Board structure. I'm almost done. In the next 4 minutes, 5 minutes, I will round up the class. Then I will allow you to ask questions. Now, let's look at the board management. In every question given to you or case given to you, there will always be a problem with the board. Anytime you see them giving you like this, you must be able to identify the problem in that case. So the company is run by a board of 6 directors. You have to bring your strategy, you have to bring your CSMA now to this place. There are Chief Adeolu Oluwasere is the chairman. Mrs. Titi Obadele, managing director. Mr. Andrew Young, technical director. Mr. Tafa Gabari, finance director. That is the person you are reporting to. Dorcas Adetoru, marketing director. Timothy Chukwuemeka, non-executive director. In this board, looking at it first, we have Yoruba, we have Hausa, we have Igbo. Correct, perfect. In ethnics, or in ethnics, whatever you want to analyze it. Now, we have female, we have male. Correct, no problem. It's also correct. When you look at gender balance, it makes sense. Then we look at the professional. We're having finance director as part of the director. It makes sense. Technical director, yes, professional. Then we have marketing director. It also makes sense. Then when we look at it, we have non-executive director, just one, which is Chukwu Emeka. We don't know, maybe chairman is part of the non-executive director. But by the time we now go to the board, that is why they give you the management. When we now come back to the board, what's the name of the chairman again? Let's go back. The name of the chairman is Titi Obadele. So let's see, maybe Titi Obadele is, no, sorry, Adeolu, Chief Adeolu. Let's see, maybe Adeolu. Chief Adeolu. Yes, let's see if it's part of the management. So it's not part of the management. So we have Titi Obadele, Tafa, Dorcas Adetoru, Ibrahim, and Tolu. These are the management. These are the people that are running the organization. And there must be clear difference between executive director and non-executive director. Because of what? Because of interest, self-interest. Now, let's go. We're almost done with the case. Let's go to the solution here to analyze the board. So the board of directors, there are 6 members. This includes executive directors who are also part of the management, a chairman, and 1 non-executive director. Now, the executive management team comprises 4 directors who also sit on the board, plus 2 additional operational managers. Now, let's look at their function. Chief Adeolu is likely to be non-executive director because he's a chairman. And if you look at it, it's not part of the management. It's only part of the board. So that is why we can categorize him as part of the non-executive. Now, Titi is the managing director, executive, and also board and management. We have Young, is part of the executive and also part of the management. We have Tafa, executive and management. Dorcas, executive and management. You will see the problem that they are going to cause without their board structure. We are going to see the problem now. Let's move on. So what could be the problem? Now, we have Dr. Timothy. He's also non-executive. So it means we have 2 non-executive now. Only board, Chukwuemeka. Then, what is your key observation? What do you notice about that? Number 1, functional expertise. Board includes experienced professionals with clear domain expertise in finance, marketing, and operation. Bravo. That board is very good in that regard. They have professional as part of the board. They will be able to make good decisions when it comes to finance aspects, marketing, and operation of the organization. That is great. Number 2, continuity and cohesion, that is overlap with management, ensures streamline communication between strategic direction and operation execution. That is, the information, the strategic information is not going to the management that are not part of the board. So the kind of confidentiality, whatever they want to do, they pass the information within the board and they carry it out. It's a good one. But now let's look at the weaknesses. What are the weaknesses we can see there? Number one, high executive presence on the board. They have 4 out of 6 that are members of the executive director. That is 67% are part of it, which involve in day-to-day management. They are involved in the day-to-day management. They are running the organization. They are the director. They are still running the organization. What could be the problem? This reduces independencies, which is critical for objective oversight. What they'll be running after is profits. They want to make profits. They want to make profit. That is where the problem. There will be self-interest there because they are part of the director, part of the board, and then the management. Then insufficient independence oversight. Only one non-executive director. Let me explain the meaning of executive director and non-executive director. The non-executive director is supposed to be part of the board to checkmate what the other board are doing, what the executive director are doing. The non-executive director are not part of the operation of the organization, but executive director are part of the operation. So the non-executive director is supposed to be the one checkmates for check and balances if what their decision they are making is for the whole general public or is just for their home pocket. So what do you think one person will be able to do out of many people? So, and no truly independent directors, contrary to global corporate governance best practices. That is, corporate governance code recommend that at least 50% independence. But these people cannot be 50% independent. That is problem number 2. Number 3, concentration of power. The managing director, Mrs. Obadele, has dual influence as both the top executive and the board member. Potential risk of unchecked decision. Whatever this person says is final, except you want to lose your job. So nobody will be able to check this person because he has power. He's taking over the most, the high place in the organization. The chairman's role, why the chairman is non-executive, his independence should be verified. We don't know, though we said, they didn't say maybe it's an executive, non-executive or it's executive, but because we know chairman and it's not part of the board of the management, we can say it's non-executive. However, we need to verify if it is really have that independent with Dr. Chukwu Emeka. Is it Chukwu Emeka or Timothy Emeka? Then team of the composition. We have report to the board, yes. Managing director will report to the board. Is he part of the board? Yes. Technical director, is he reporting to the board? Yes. Is he part of the board? Yes. Finance director, reporting to the board? Yes. Is he part of the board? Yes. Dorcas Adetoro, is he reporting to the board? Yes. Is he part of the board? Yes. HR manager, is he reporting to the board? Yes. Is he part of the board? No. Only 2 people are not part of the board. Other people, they are part of the board, they are reporting to the board. So they are reporting to themselves. There's a problem in that regard. So we are going to write that report before before Saturday to be ready. You will see how it's going to look like. So now, what are the key observations? We are done. Just round up and then we are good to go. Now, is coverage of core functions. All essential business functions, marketing are represented in the management team. Clear reporting line, roles and responsibilities are defined and with all executive reporting to the board. Experienced leadership team. Those are the area is lack of separation between strategic and execution. So the overlap of 4 board members with executive roles may lead to a conflict of interest. That is just the problem. When strategic decision and review are challenged. Lack of C-suite depth, no indication of a chief operating officer, chief risk officer, chief information officer. This may limit in-depth in operational risk. There's no risk manager. And they said they said we should assess risk. There's no risk manager. So who is going to assess the risks? Those are the problem. Then succession planning gaps. No clear succession planning structure or leadership pipeline beyond current role holder. They are all top experienced and professional. We cannot even see young people among them. Though they didn't tell us about the age, but that tone tells us something. I think I should stop here so that will not take much of our time. Ladies and gentlemen, what is the question so far? We have done justice to the case. You can just go through yourself. You can go through it yourself. It's good to go. You can see the type of products they have. I think I've just touched that area. The type of products they have, the product they have. So they have different type of products. Okay, I think it's at the top there. They have different type of products. Okay, so you can see the type of product they have. They have luxurious, which they call premium customers. They have high price, quality and comfort focus. We have super, which is mid-high income consumer. We have simple for middle economy, for those who are not earning too much, but is balanced, affordable, and quality. We have economy, that is low income earner can achieve, can also buy, and price sensitivity and low price. And then value for money, at least you enjoy what you use your money for. So let me open a question now. People of God online, any question, anything you want to hear? On Saturday, we'll be meeting for paid class. This is just to introduce the case. So on Saturday, we are meeting for the paid class. That will be on 17th. That will be paid class. So it will be from 2 to 6. So we are going to do possible calculations. We are going to draft the report. Then I will explain what are the key areas you should do when you are writing that report. So my number is also showing on the screen. You can chat me. You can chat me on WhatsApp. Then I will add you to the platform. Okay, my people, any question, anything you want to understand from the case? I think I'll be able to do justice to that case. You can unmute yourself or you drop chats, whichever way that is convenient for you. It is best time to ask question because this is opportunity for you. You must understand the case very well when going for the exam. I think I have a question already. Let me check my inbox. You can unmute.
Hello, good evening, sir.
Okay, good evening, sir.
Yes, sir. Thank you so much. Honestly, I must say I'm really impressed, honestly, because this is my first time attending case study class with HOA. I said, let me give it a trial and see. And I must say, I am not disappointed. In fact, what I am getting here really surpassed the expectations I set before joining this. I must say you are doing very well, and kudos to that.
Thank you very much.
In fact, from the analysis you've done so far, you've really done justice to them. It's now left for us to go and critically examine it and then see how we can apply it if issues like this comes up in the exam. That aside, I have 1 or 2 questions I would like to ask. The first question, while you were going through the analysis, you made mention, there was a point where you mentioned risk, as in calculating the risk of the company and kind of comparing with the industry average risk, something like that. I don't know if I really get that part correctly, but my area of concern is is there any way we can actually calculate the risk of the company? Is there any formula? Or maybe in the unseen, they will state the risk of the company and that of the industry. That is, if there's going to be anything like that. That's one. Then secondly, again, talking about the board members, I don't know. Is it proper for the board members shareholding structure to be stated? Or it's because this one is a limited liability, that's why it's not stated as in a private company? And if it's possible for the share structure to be stated, can we also have that one as a weakness since it wasn't stated in this press scene? Just trying to satisfy my curiosity. Yeah,
All right,
thank you
thank
very
you.
much.
Thank you very much. A good question. So let me start from that, your first question. The risk, I'm not sure they will ask you to calculate any risk. But when I say risk appetite, it is possible they put it in a case, but it's likely, I'm not sure they can put it. They can just tell you that the risk for going for this project, the risk in this project might be so percent or 20%. Or you look at it in the case, what is the perception of the company concerning the risk? There are some companies that they run away from risk. They're not really interested in risk. And then there are some companies that they like taking risk. So in that area, we call it risk appetite. That is how much risk an organization is willing to take. So are they willing to take beyond a certain percent? Maybe they have their own limits. Any investment that is having 50% risk, we are not going. Any investment that is having 20% risk, we are not going. So it means they have limits to risks they can take. So I'm not sure there is any risk calculation they will ask you to calculate. They can only put it in the case. You can just look out for it in the case. In case they mention something like that, it can be part of your point you are going to raise. Then the second one about the board, I'm not sure they can give you the shareholdings. But I remember when I was writing my own case study, they gave me, in that case, they gave us the shareholdings. But that shareholdings was in form of acquisition, merger and acquisition. And we're looking at the shares of the company that wants to acquire, and we are looking at the shareholders. And I noticed that one of the shareholders will be having more than control, will be having more than 60% than every other shareholders in that company. And that's what I kept saying in my reports, that this one will have control more than others, and then the control and it will influence, there will be self-interest, and I kept saying that. So I'm not sure they will give you shareholding. If they want to give you shareholding, it might be in form of calculations that will be determined, maybe they should go for. But in this case, I'm not seeing anything like shareholding coming. Okay, I believe that is clear. Judith,
Yes, sir. Thank you very much.
all right. Judith Abel, your question, raising up your hand.
Yes, good evening, sir.
Good evening.
Like what the previous guy earlier said, I'm really overwhelmed. Like, I'm surprised about what I just got just few hours now. Like an eye opener. I really appreciate you for that, sir. God bless you, sir.
Thank you very
Okay,
much.
I have a question. And the question is, I know you're trying to give us an highlight of different requirements of Mr. Matthew, that's of us now that will be writing the report. And then I don't know, it's just a question for clarification. So all these highlights now on his role, because his role will be merged into two basic requirements, right?
Yes, exactly.
Right?
Yes, you
Okay,
are
so
right.
his rules, these 6 rules or 5 rules will be merged, will be compressed into two basic requirements. I
Exactly.
don't know, isn't the body of the letter that will be analyzing all of this?
Okay. So all these
Isn't the
requirements,
body of the reports?
yes,
Yes.
you will have the
Isn't
body
the
of you have them in the body of report, and some will be under executive summary. But we are going to draft that on Saturday. Before Saturday, you will see how that report can come out. But I'm with you.
Okay. And okay, that's one. And sorry, another thing I want to get clarification on is, on each of these role responsibilities of Mr. Matthew now, there is an assumed observation and then a recommendation that you profiled. So doesn't that mean that we are going to summarize, for instance, under this basic requirement they will give to us on that day, we are going to summarize these recommendations in the recommendation for requirement 1 and then for requirement 2?
Yes, you will summarize the requirements together. That's why,
Okay.
yes, you will summarize it together. Once you are done with all your findings, then you put the recommendation for as many problems
Okay.
you identify as possible.
Okay.
Mm.
As
you need to see the draft report we are going to come out with. That also will
okay.
throw more light to what you.
That's one, two, okay. Another one is
Your network is not that stable again.
okay. Okay, that's fine, sir. Okay, directors that was given in the case on that day. Hello, sir. Can you hear me? Hello.
Your network is
Hello.
breaking, but I can hear you.
Hello, sir.
Yeah, I can hear you.
Okay. I said the analysis and composition of the board, for instance, we actually see key observations, their weaknesses, and then the recommendations so far. Are we going to state it like an appendix, or we'll just talk about it in the body of the findings?
You will talk about it in the body of findings, not as appendix.
Okay, thank you so much. I think that's basically all for now.
All right.
Thank you, sir. I'm grateful. God bless you, sir.
Welcome. You're welcome. All right. Any other questions? Are we all good? At least you have some confidence now that this exam is now ready to go.
Yes, yes, yes. With
right.
this, I think I'm even ready.
Olamide or Larinde, I'm with you. Any question?
Yeah, good evening, sir.
Good evening, ma'am.
Yes, sir. Thanks for the lecture, because I will see it as a lecture. It's really, really impacting. Okay, yeah, my question goes in this way, because I can sense foreign exchange, because I think most of this is in dollars, dollar. So I don't know, what can you say about it? Because
Yes.
if it will be coming, if there's anything relating to foreign exchange, so because me, I don't really like I don't want it to miss me unaware. So what can you just
Based
say
on,
about
based on
it?
what we are saying, they source 70% of the raw material from outside country. And definitely
Yes.
they are going to buy in dollars, but that does not mean they will send question on foreign exchange. But don't worry, on Saturday we will throw more light on that area. Are we good?
Okay. Then my other question is this what's it called? Oh, I'm trying to remember one of this business analysis that has to do with penetration, yes, diversification. So
Okay.
how does it relate to this? Yes, how does it relate to this to the report?
Well, it depends on the strategy they want you to use. So when we see on scene, we'll be able to determine, we know the case is still half case now. We don't know the conclusion yet. So,
Yes.
but at
Yes.
least we can predict what is likely to come out. And that is why we are here. But today I just want you to have idea of that case. Do you understand? So by the time you now
Yes.
see my own report, it's going to have I mean, it's going to be close to the prediction to what is likely to see in the exam. So you're going to see likely models you are going to use that we are expecting, how we are going to put it in the report. I think we can just look out for that. But you can see from what I've analyzed so far, you will see like 5 models that I've already talked about. But we are going to pick at least maybe 2 or 3. We'll be expecting them to use. That's if they want to test.
And the okay,
Yeah, I'm with
the
you.
management and the board. The board. I sense a kind of probably their family members. I was just thinking probably their family
So,
member. It's just all this
is
kind
there
of
any name
okay.
that is similar to each other there? I'm not seeing the name that is similar there.
No, they're not
So
okay.
I'm not sure they are family members. I'm not sure. Yeah.
Okay. All right. Thank you. I think that's
Yeah.
fine.
Okay, before I pick another one, they said, is there any possibility of them changing it from an internal report to an external report? I'm not sure there's a way they can twist that one again. But I'm going to tell you, I'm not just telling you that this is internal report. You need to know the tone when it is internal and external, so that even if anything happens, you will know that this is now internal, is no more external. So I will teach you how to fish, Abi. I will not give you the fish, don't worry. They are mixed, so abeg o, Hausa, Igbo, and Yoruba. Yes. Okay, Yunusa, sorry, Ibrahim, you can ask your question. I have 2 people raising up their hand. Can we go outside the case given to write our reports?
Good evening, sir.
Yeah, good evening, sir.
Yes, sir. My own questions are, first of all, we really appreciate you. I'm a
Okay.
returnee. Which, I blame you not for my failure last time. It's
Okay.
my inability to do the right thing.
Okay.
But my question is that since this is an internal report, we are assuming it will be an internal report, sir. What will be
Yeah.
the major difference between the internal report and the external report? That is with regard to the cover page.
Yes. The thing is that, as at now, I don't want this meeting to be too long. Do you
Okay, sir.
understand?
Yes, sir.
But the internal report, we just have it will be internal memo. So you just need to know, okay, this is internal memo. I think our focus should just be on internal memo now, or internal report. But don't worry, since we are on the same group chat already, by the time I'm done with the report, I will still show you, maybe on Saturday, I will show you in case they change it to external, but this is internal already. I'm not sure they
Okay,
can
sir.
change. Mm,
Okay, sir. Thank you, sir.
yes. Yes. Okay, there's still another person raising up hand. Who again? Ayorinde. Okay. Hello, ma.
Yes.
This
Good
Ayorinde.
evening, sir.
Good evening, ma.
Yes, sir. Yes. Thank you very much for the job well done. And
Thank you,
it
ma.
is my earnest prayer and desire that God will help us to pass and encourage you so that you'll be
Amen.
of help to others coming behind.
Amen.
Please, I want to ask your analysis on the board of directors and the NEDs, I think should basically come under the executive summary. I'm just
Yes,
asking.
we can put it under
And
executive summary. Even
okay,
the trick is that your solid points should be under executive summary. Why the other one you put it under the report? But we can find it under executive summary. You can put it under executive summary. You will see the way I'm going to do it on Saturday. Before Saturday, I will have sent it to you. You are part of our group chat. So I will prepare it and see where I'm going to hide it.
then meaning that all other calculation work is what will go for the business proposal.
Yes, on Saturday too. That's what we want to do on Saturday. We are going to create some figures for ourselves. We will use that to train ourselves before the exam. Possible figures that you may expect in the exam. So we use that to practice and put it as part of our reports. Then it will prepare us against any figures they want to bring or any calculations they want to bring and where we are going to put it. Is that clear? Is it better? I think
Thank
our
you,
network.
sir.
Okay, yes, you're welcome. Okay, I think I'm not seeing any question again. You have to write according to your requirements. Do not sit another question for yourself. Okay, Lillian, your question, that is how I shock us last diet with a strange financial statement. Good evening, sir. Can you please speak more about the appendix and expectations? I will do that on Saturday, don't worry. Please, can you send what you use for this analysis to the group? Yes, I will send it to the group, but not to the general group. We have a case study group for paid class, so that's where I'm going to send it to. Okay, I'm with you, Lena. You can go ahead.
Okay, first I want to really appreciate it. This is my first time, and I must say I really took a lot. I really took a lot. God bless you so much, sir. But I don't really have a question, but then I'm seeing a question here which I think I don't know if you answered, but I really want to hear your response to it. So this person said, "Good evening, sir. The last I can set a case study question relating to the last time I can set a question relating to manufacturing company, the examiner required the student to analyze value chain analysis." I don't know if you can help respond to this
The
question.
value chain analysis, right? Yes, it's also
Yeah.
it's also part of the possible models. It's part of possible model. You know, I said I've mentioned like 5 models in the analysis. So we will select possible, and you know, there are so many models, but there will be some model that are very relating to that particular case. So we'll pick like 3 closest models that can be used. So it can be in 2 ways. Examiner can ask you to use a particular or a specific models, or they can ask you to use any model that you think suitable. And they may decide not to test any business model. However, we'll prepare for both. Either they test it or not. We'll be ready for it. And that's why you need to see the report and then get familiar with it before the exam. Is that clear? Okay. As I have so many questions, Mike and others. I think Julia is also want to ask another question. Oh yeah, let's be fast. This is already 2 hours video. Wow. I'm with you.
Okay,
Mike.
sorry
Okay,
again.
okay, yes, I'm with you. Go
Okay,
ahead.
good evening, sir. Sorry, I'm coming back again.
Okay.
Sorry, I don't know. I think I'm not in that your group, or I don't know if they can add me up, please.
Just chat this my number. That's why I put my number here. You can
I
see my
can't see the number.
just here 070
Okay, 070
84
84
19
19
50
50
and 77.
77. Thank you, sir.
Yeah, 77. Yeah. Okay. Michael or Mike, I'm with you. Any question? Hello, sir. Is it okay to take some clues, like taking some of the information given from the precinct while changing the wordings? Don't copy and paste. Copy and paste is not allowed, please. Don't copy and paste. But we are going to explain that on that. Yes, but you have to reframe it, I guess. Okay. That's been answered. Then Mike, any questions so that you can close? It's already 9 o'clock. It is Team Mike. You are raising up your hand. Okay, I think there's no question again. Let's call it a day.
Sir, please, sorry, sir. Someone asked what's the best strategy in writing the case study exam. It was asking if we start by calculating the ratios first, or how best should it be done. I think Shima asked that question, but I don't think you saw it.
Okay, that how best to do what? How
The
best to
person
start?
asks, what is the best strategy in writing the case study exam? Yes, it was asking if we should start by calculating the ratios first before writing the report.
Okay. I will just tell you the best strategy you can write your executive summary without calculations. Then you can now start with calculations. Then after calculation, you now go to the body of reports. However, you start from the back of the reports when you are writing your case study. Start with calculation from the back because the first 1 hour should be used for calculations. Then the remaining 3 hours for reports and the executive summary. I will touch more on that area later as well. Good evening, sir. Please don't forget to add me to the group. I'm not adding no. Okay. Just chat me. I have so many chats to respond to. Good evening, sir. Will Saturday be adequate for this case? Yes, Saturday is enough because I will have done all the calculations and drafts. We are just coming there to review and then practice. So that's why we used to do it. Sir, can we get the video of this analysis to listen to again? Yes, I will upload it on the YouTube, on this channel, on our YouTube channel. Just search for House of Accountants Professional Services on YouTube. You will see the video there. I will upload it. Sir, how do we manage time in the examination hall? Let's do all this on Saturday, please. Okay. Let's do all this on Saturday. I have to go now. Let's continue our conversation on WhatsApp. You can chat me. Let's talk. Okay. Can we stop now, people
Thank
of
you.
God? My people.
Thank you so much. We appreciate you.
You
All
so
I'm
much,
right.
very
sir.
glad. God
All
bless
right.
you, sir.
Thank you very
I've
much.
made you a pleasure.
Yeah,
I
thank
wish
you so
you
much,
good
sir.
night.
Good night.
Yes. You can join on
Thank you very much,
Saturday.
sir.
All right. Thank